Did you know that apartment syndications have historically provided average annual returns between 10 and 23%? Today, I'm going to review the pros and cons of investing in real estate using two different options: apartment syndication or actively investing on your own. As someone who's both built my own real estate portfolio and passively invested in several syndications, I'm going to give you the behind-the-scenes look at my experience with both options. But before we jump in, don't forget to subscribe and hit that like button. So if you're new to real estate investing, you might be wondering what the difference is between apartment syndication and actively investing on your own. Apartment syndication is when multiple investors pool their money together to invest in large apartment complexes, usually through a partnership. On the other hand, actively investing on your own could be in the form of flipping houses, short-term rentals like Airbnb, or even long-term rentals. Both strategies have their pros and cons, and today we're going to review exactly what those are. With solo investing, you've got total control over the property, but you're also shouldering all of the risk. If the property doesn't perform well, you're the one that's on the hook. Additionally, it's your time and your effort that's going into making a successful investment. With syndication, you're spreading the risk among multiple investors. And as a limited partner, your involvement is completely passive. There's no management responsibility and no taking calls in the middle of the night. You are giving up control of the property, but you're getting a hassle-free investment in return. So let's dive into the pros and cons of flying solo or partnering in a syndication. If you decide to actively invest on your own, you'll have complete control over the investment. You'll get to keep 100% of the income, and the tax benefits will flow directly to you. But on the flip side, you'll be spending your time and your effort to manage the property, or you'll be managing a property manager if you hire one. And since you own the property all alone, you'll also have 100% of the liability, which means you bear all the risk. It's also harder to diversify since you're probably going to be limited to your immediate geographical area, which also means you might not have access to the best investment markets. Finally, the success of the investment is going to be limited to your experience and your expertise. If you passively invest in an apartment syndication, you'll receive 100% passive income streams. As a limited partner, you won't be doing any of the work. The general partner has management control over the investment and handles all the day-to-day activities. With a larger property also comes the possibility of receiving high potential annual returns, historically in the 10 to 23% range. There's also no management, which means your investment is completely hassle-free. And that means there's no tenants, toilets, or termites to deal with. You'll have the ability to get accelerated tax benefits through things like bonus depreciation and cost segregation. There's limited liability since you're spreading the risk among multiple investors and across multiple units. And unlike investing in a real estate investment trust or a REIT, you can select exactly what properties you want to invest in. The downside is, as a limited partner, you have no management control over the property. You'll also be paying fees to the general partner to acquire and manage the asset. And you won't have access to your initial investment during the hold period, which is typically around 5 to 6 years. If you want to learn more about apartment syndication, be sure to check out my other video on the 5 secrets to building wealth with passive apartment investing. So let's take a quick look at a real-life example based on my own experience investing both actively and passively. After doing a lot of upfront work, including identifying a market, building a team, and analyzing lots of potential deals, I bought a single-family property in a great part of town. After the down payment, the holding costs, and all the renovations, my all-in costs were about $60,000. When I bought the property, I projected my cash return to be about 10% the first year. The actual cash return turned out to be about negative 10%. So what happened? Despite a great location and a complete renovation, my property manager ended up having to evict the tenant after just a few months of leasing the property. That process took about 4 months to work through before I was able to get another tenant. And although I did plan for some vacancy, I wasn't expecting 4 months of lost income that first year. The thing about single-family rentals is that when you have a vacancy, you're 100% vacant. Several months of additional expenses and lack of rental income left me with a loss of about $5,300 that first year. Now let's compare that to my first investment in an apartment syndication. After doing some initial research and due diligence, I found a sponsor I liked and made an investment of $100,000. Cash distributions started about 2 months after closing, and since then I've received a consistent 6% return, or about $500 a month. I've been in that investment for about 2 years and have made around $12,000 in passive income so far. And if everything stays on track, I'll receive about $200,000 at the end of the whole period, or basically double my initial investment. And the best part is I don't have to spend my time doing any of the work. At the end of the day, whether apartment syndication or solo investing is a better option for you really depends on your goals, your resources, and your risk tolerance. Syndication is hassle-free, can provide above-average returns, give you access to large properties, and helps you diversify risk. But it does require you to put in some initial work to identify the right sponsor. Solo investing gives you full control and autonomy, but it increases your personal risk and requires your time and your effort. For me personally, I can honestly say that investing in apartment syndication was both an easier and less time-consuming way to invest in real estate. The returns are better, and I don't have the headaches of having to do the work myself. If you're a busy professional who's looking for a hassle-free way to create passive income and build long-term wealth, apartment syndication is a great option. If you got value from this video, please hit that like button so I can reach more people in the algorithm and help others learn about the benefits of passively investing in apartment syndication. If you've had an experience with either apartment syndication or solo investing, I'd love to hear about it in the comments. And if you're interested about learning more about apartment syndication, be sure to check out my other video on the 5 secrets to building wealth with passive apartment investing. See you in the next one.